Hello friends, this is Raj Sastry from Raj Option Trading. Today is July 26, 2022. Hope you're all doing well. So in today's segment, we'll take a look at the earnings and look at two of my favorite CEOs, Mr. Satya Nadella from Microsoft and Sundar Pichai from Google. So with that, let's jump in and get started. So we look at the earnings theme and look at a quick market update and look at earnings update, and specifically we'll look at both Microsoft as well as Google. So with that, let's jump in and get started. All right, so from a market update perspective, look, Federal Reserve is expected to make a large interest rate increase to tame the inflation. So we got to be careful here. Tomorrow Fed might meet and they might surprise us, so we have to be careful. So Jay Powell has been very consistent. He wants to increase the rates, and he might even have a hawkish tone, and he might increase the rate later also. A 75 basis point rate hike is in the cards right now. It's already baked in, but you have to watch for their what they will say for the future rate updates. So we got to be careful there. We got one more meeting coming up in September. If they sound too hawkish, we got to be careful. Market will come tumbling down. So at this time, I expect market to be a little bit watchful, and it might come down at any signal that Fed might increase the rate further, even after tomorrow's 75 basis point hike. So with that, look, from a theme perspective, the retail stocks are down, with Walmart sending all the retail stocks down here. At this time, we could slowly start buying some of the retail stocks, including Walmart. So it's a great buy at these levels. Two of my favorite companies, both Google and Microsoft, they announced. Looks like stock went higher, even though Google's earnings was not great. And looks like travel is doing well. Both Visa as well as American Express, they top the earnings. Looks like travel spending is increasing. Consumer is opening their wallet when it comes to travel. And UPS stock came down after the earnings. Looks like their volume dropped. So we got to be careful with some of these retail and e-commerce type names here, with UPS dropping. So with that, let's jump in and look at a quick market update. All right, look, from a market update perspective, we got S&P 500 futures here, or /ES, on a yearly basis. Look, we got a nice downturn here, and it's trying to go higher. So tomorrow, after the Fed rate hike, this might come down. We got to be careful. Depending on Fed's tone, it might come down. And similar trajectory or similar trend in Dow Jones Industrial Average, nice down channel. And Nasdaq, same story here, a little more weaker. And look, we got interest rates trying to go higher slightly, and dollar is going higher. That's creating problem. Most of these companies are saying, hey, they got issue with the foreign exchange because of strong US dollar. Look, gold is completely beaten down here. If you're a long-term type investor, you could buy some gold. It's a good hedge play here. All right, crude oil is coming down slightly, as you can see here. You could buy some great companies like Chevron and EOG, even ExxonMobil for the matter, Devon, and so on and so forth. All right, look, from a market breadth perspective, we got here skew is trying to go higher, as you can see here. That tells you there's strength in the market at this time. We are nowhere close to high skew. If the skew hits about 140, 150, I would be careful. But right now, we can go higher, indicated by skew here. And from a trader index perspective, generally, look, advanced stocks advancing are higher. That's why this moving average is trying to go higher, as you can see here, which is a good news from a trader sentiment perspective. And tick is doing okay. It's nothing bad here. Today market came down, that's why tick came down here. But otherwise, nothing great about tick at this time here. Look, from a volume perspective, because today market dropped, we got volume trending down here. That's not a great news. but we got to be careful tomorrow Fed, and it might even come down. A lot of folks are really selling all these high growth names here ahead of Fed's announcement. And look, VIX is inching up, as you can see here, slowly inching up. That tells you there is a lot of uncertainty in the market with the earnings as well as Fed rate hike. And look, we got a put call ratio. It's going higher as of now. That tells you right now, if you're a put option seller or even a call option seller, if you're a premium seller, you can make some good money here. Right now it's approaching higher. This is option sellers paradise. And then you got USD JPY AUD JPY combination here. Looks like folks are buying the stock. That's why AUD JPY is trending higher, as you can see here. But today it got clobbered slightly, but generally it's trending higher. That means risk on. People are buying stocks. And you got US dollar trying to go higher. That's a issue for multinational companies and even commodities like gold, copper, silver, so on and so forth. All right, now let's jump in here and look at a market update quickly. Look, from a market update perspective, look, we got all these markets down today. Dow Jones Industrial Average down 228, Nasdaq down 220, and look, S&P 500 down 45. All these all these markets are down, as you can see here. And look, from a numbers perspective, from a color and heat map perspective, look, all these big names like Microsoft down, Google down, Meta down, Apple down, everything is down, as you can see here. But look, on the other hand, healthcare is doing pretty okay. Look, healthcare is doing nicely. And we got consumer defense, that's also doing okay here. Real estate seems to be doing pretty okay. Few industrials are good. And if you look through here, year to date, let's quickly go into year to date here. Look, year to date perspective, all these big names like Microsoft down big time and Google down big time. Apple again down. So you can see the theme here. It's a very tough market with all these big stocks going down with the geopolitical tension and macroeconomics. So with that, now we'll jump in and go back and look at a few stocks here. All right, look, we'll look at Microsoft here. Microsoft announced their quarterly results after the close. Look what happened after the close. During the market hours, Microsoft came down by $6.93. But look, after the market, it went higher. That tells you Wall Street liked what they saw. Microsoft is doing great. That's why stock went up after the market, after hours, which is great. Look, Microsoft jumps after shockingly robust forecast. Their forecast was strong. That's why it went higher. Upbeat growth forecast. That's great. Satya Nadella is delivering the growth, and revenue was good, up 12%, as you can see here, up 16% in constant currency. They also mentioned about the currency exchange situation. And net operating income was up 8%. That's great. Net income was up again. Diluted earnings was increased by 3%. Overall, I think it's a great quarter for Microsoft. This tells you Satya Nadella and Microsoft executive team, they delivered despite of macroeconomic challenges. That's a great testament to the great company. All right, now let's jump in here and look at stock chart. Look, we got a Microsoft chart here, 18 months from a Thinkorswim platform here. Look, stock has been not doing great of late, right from 2022 here. I think we got 2021 and 2022 start. Look, stock is getting clobbered, as you can see here, not doing great. But afterwards it went higher. That's a good story here. On the balance, volume was coming slightly down here. People are really selling ahead of the earnings, as you can see here. And RSI is very low here. 42 tells the stock is clobbered here. It's much below 50. And look, from a DMI chart perspective, it's tending to be bearish with the blue line trying to come down, red lines trying to go up, as you can see here. And finally, check-in money flow is telling you a lot of these hedge funds are selling Microsoft before the earnings. That's why it's dropping down here. Volatility is increasing. Typically, that happens, before the earnings. But the volatility should drop. Right now, IV rank is 60. That should drop off tomorrow after the earnings announcement. After the earnings, typically it drops off here. So with that, I guess Microsoft is a great stock. During this Fed call tomorrow, if Microsoft drops, you could safely buy some Microsoft and shove it away in your long-term portfolio or even retirement portfolio. All right, now let's jump in here. Look at their financial summary. Look from a Microsoft financial summary perspective, their productivity and business processes. Look, there's a nice 13% growth, which is good. And intelligent cloud, there is a nice 20% growth, as you can see here. Constant currency even higher. And personal computing also, there is a growth, as you can see here. Nice revenue growth, 12%. And gross margin, look, it's 10% here. Gross margin is also nice here. And look, operating margin also nice. And net income is also good. And looks, they got a negative gross margin percentage here from a growth perspective. I think Wall Street was okay, even though there's a negative change here. But still, Wall Street is okay with this financial summary. That tells you Microsoft is doing great here. They showed some growth, but it was slightly lower compared to the previous period. That's why you see negative here. They took some hit on operating income percentage and gross margin percentage, which is a very small hit, not a big deal here. With that, I say, go buy some Microsoft. It's a great company. All right, look, they also talked about some foreign exchange. Because of unfavorable foreign exchange rate movement, they had to there is a negative impact to the revenue and diluted earnings per share by $595 million. And negative 0.04. That tells you even the big companies like Microsoft will take some hit when there is a strong US dollar. And they also talked about shutdown in China and deterioration in the PC market. All these things are going on here, so you got to be careful here. And looks like advertising spend contributed to a negative impact on LinkedIn. So it's really, they're talking about some of these cautions that we got to be careful about, including the war. We got to be careful. They basically talk about these geopolitical issues, as you can see here. So with that, Microsoft is a great one here. They beat and they raise, which is a good story. All right, next is Google with my favorite CEO Sundar Pichai here. Look, Google stock after the split, it's at 105 here. It's a good price. We can afford to buy Google after this big split here. Look, during the market, our stock came down by $2.49. But look, after the earnings, after our stock went higher. That tells you, this is Google is doing great here. Wall Street liked what they saw. Unlike Microsoft, Google's earnings was not that superior like Microsoft. Look, their revenue growth falls to the slowest pace in 2 years. Not so great. Their ad business is doing very well. Unlike Snapchat, where there is a considerable slowdown in the ad business here. Look, Google is doing very well, especially because it's a search company. And their search also did very well here. They did not snap. They did not do like Snap here. They're doing very well, as you can see here. And look, they managed to manage barely, as you can see here. And look, it grew 12% year over year to $56.3 billion, which is great. And Google profits slump as recession fears mount. Anyway, they grew, but they did not grow at the pace they used to grow in the past. That's why still a great company. but growth falls to the slowest pace in 2 years. All right, now let's jump into a little more detail here. Look, from a stock chart perspective, Google is also same story here. Stock has been falling. Look, in 2022, stock did not do very well. That's one of the reasons after the earnings stock went higher. Look, on the balance volume is trending lower here. And it's pretty okay. Look, it's generally trending higher, but slight trending down in the recent past. RSI here 38 tells you Google is completely clobbered. I like Google more than Microsoft at these levels because it's completely beaten down with the low RSI here. And look, from a DMI perspective, look, red line is trying to go higher, blue line is coming down here. That tells you at these levels you could buy Google here. These things might change because after the market it went higher. People might buy this company, especially because after the split, look, stock is very cheap, 105. And look, IV percentile is super high here. If you're a put option seller, you could make some good money, or you can sell some call option, way above here and make some good money in Google or Alphabet. All right, now let's jump in here and look at some numbers. Look, from a numbers perspective, Google, as you can see here, 2021, there's a 62% increase in the revenue. 2022, just 13%. So that tells you the pace of growth is slowing down, as you can see here. And look, from a operating margin perspective, 2021, 31%. They took some hit in the margin also, as you can see here. 2022, 28%. There is a 3% drop in operating margin. Operating expense perspective, look, they had some operating income in 2021, and other income. There's a other loss in 2022, again a little bit negative. And finally, net income perspective, look, net income also decreased in 2022 by about $2.5 billion. So overall it's growing, but the pace of growth is slowing down, as you can see here. All right, now let's jump in here and look at FinViz platform and look at these companies here. Look, we can bring up here first Microsoft here. Look, we got Microsoft. Look, it's a great company. Look at that pace. I love the way Microsoft is growing here. Look at the nice clip in the revenue, trending higher. Sales is trending higher nicely. Shares outstanding is coming down. That's a hallmark of a great company. I really like this company. And look, we got July 26th today. And we got an outperform rating for Microsoft here with a price target of 287. And look, right now stock is at 251. That's about a $35 increase from the current price. That tells you, analysts are still upbeat about the company. And look, July 19th, they got a upgrade from Citigroup here, buy rating. June 29th, again a buy rating. It's a great company. You could buy this company even up here. And look, from a quarterly perspective, this company is doing great. Look, nice quarterly revenue, as you can see here. I think this is a great company. And as you look through stock ratings from stock over here, we could bring up Microsoft here. Look, we already have Microsoft up here. Nice earnings per share, like you talked about. Nice earnings per share. Nice revenue. That's also great. And as you look through here, financial strength perspective. Look, Microsoft, from a total debt to equity perspective, look, the debt is coming down. That's a great story here, trending down here. That's a good one here. Microsoft is also doing very well here. Overall score for Microsoft is 82. That tells you this company is doing great. And as you look through here from an analyst perspective, let's see here if we have analyst rating here. I think we can go right here to Insight and look at what analysts are saying about this company here. Look, from a analyst perspective, Microsoft is a strong buy right now. I like it. So it looks like, folks, analysts love this company here. And there's a nice median target of $344. That tells you this company even can go higher from here. All right, next let's look at Google and see what's going on here. All right, let's bring up Google here. Look, Google is also trending down. It's more beaten down than Microsoft, as you can see here, leading into the earnings. Big, huge drop here. RSI 38 tells you stock got clobbered here. And look, from a number perspective, nice uptick here. Earnings per share growing. Sales is growing nicely. Shares outstanding coming down. All great here. And they got a market perform rating with the price target 113 and current price is 105. Nice increase here from 105. I think it's a great buy here, mainly because it's completely sold off. It's a great company. And look, from a quarterly number perspective, this company is doing great here. Look, total revenue slight down in 331 and the pace of growth is a little bit slowing, but still a great company. I love this company at this level. And we could look at stock rover here and bring up Google. All right, look, Google is also strong buy here. Look, nice strong buy here. And we could go into our stock rover ratings here and see what's going on with the Google here. So we got our Google. Look at the overall rating, 89, even stronger than Microsoft from an overall rating perspective. Looks like they took a little more debt, as you can see here. Debt increased between 2018 and 2020. Now they're trying to scale back on the debt. And from an efficiency perspective, let's look at the operating margin here. Looks like operating margin is increased in 2021 here, but now it came down slightly. Net margin also increased, but looks like a trend in the recent quarter is down because of all these geopolitical tensions. All right, so with that, I would say, go buy some Microsoft and buy some Google. Great companies. I think long term these are good ones. I would even add Amazon to the same list here. After Amazon got split, it's also relatively cheap stock here. Could buy that one also. So with that, thank you very much. Happy investing here. Oh, let's quickly look at the numbers here. Look, we got Google as well as Microsoft, from TC 2000. Look, nice sales growth in both companies. Fundamental perspective good. Nice net margin. Companies are making money at the end of the day. And look, from a number, from a performance perspective, both of these companies have been lagging off late here. This tells you, week -1, week -2, week -3, how are they doing on a weekly basis. Going into the earnings, look, Google was a little bit weaker here. That's why it's a great buy up here. And Microsoft is also down, as you can see it. It was slightly up for last week, but generally, look, it's down in week -2 and week -4, so on and so forth. And look, from a monthly performance perspective, Google, June they were down, as you can see here. May again down, April down. It's down for a while. Same story with Microsoft. All these tech stocks got clobbered here. That's why after the earning, after hours, they're going higher. And look, on a yearly basis, look at the performance in 2021 all the way to 2008. These two companies have done great from a performance perspective. Google had a little bit hiccup back in 2018 during the high inflation environment, but Microsoft did very well, even during high inflation environment. That's why Microsoft, under Satya Nadella's leadership, this company can even churn and do very well. Year to date, both have dropped about 27 and 25%. That's why these are compelling buy at these levels here. If there is a Fed-induced sell-off, I say go buy some Microsoft as well as Google. Great companies. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.